Hey guys, what's up? So in today's video, I'm going to be giving you my top 4 stocks that I'm looking at right now. And one of these stocks I just invested 5 grand into. Full disclaimer, I am looking very closely at emerging markets outside of the United States. So one emerging market that's really interesting to me is China. And it's not just me that's being interested in China. It's actually a lot of very big banks and very famous billionaires that I'm going to be covering in this video to kind of back up a little bit what I'm talking about. Now, one of the reasons why I'm looking at emerging markets is mainly because I'm looking at the United States market and a lot of their stocks just seem fully priced in for a perfect recovery, where in reality, we haven't really seen an economic fallout from this health crisis yet. But I am under the belief that we're going to see some bad economic times ahead of us here, maybe over the next year. So it doesn't mean I'm bearish on the United States. I am invested in United States public traded companies, and I am going to continue to invest in the US. However, it is always good to look at diversifying your portfolio into other countries as well. And I think right now is a good time to keep an open mind to that. So in the United States, we still see insane jobless claims. So unemployment is at an all-time high. The C word, I can't say it, that is at an all-time high. We're seeing an incredible amount of cases day over day, and it keeps on going up. Some experts are saying we could see 200,000 cases a day. So it's getting a little bit out of hand. And then on top of that, we're also seeing a mass exodus out of cities. So a lot of people are leaving their condos to move into more rural areas. And this is really bad for the economy. The cities are really the heart of the economy. It's where most businesses are, it's where most people live. And that is where a lot of money velocity is generated. So seeing people leave the city, this is gonna have massive pressure on the condo market and also in the commercial real estate market, because we're seeing a lot of these big tech companies also just not renew their leases because they're all working from home now. And so a lot of these buildings are gonna go empty. And when you have massive commercial buildings that are gonna go empty over this next year, well, a lot of the small businesses surrounding those big commercial buildings depend on the foot traffic from the commercial buildings to generate revenue in their stores. So yeah, small businesses are gonna be really hurt from this as well. And this is gonna have a really bad ripple effect through the economy that we haven't yet seen. So you can see here, JP Morgan is looking at emerging markets. BlackRock is overweight emerging markets. A number of big banks really are. And then some of really famous investors are looking at as well. Ray Dalio is very invested in China as well. It says here, why Ray Dalio has 6% of his portfolio in emerging market ETFs. So he's very bullish in China. He talks about it a lot. I listened to a lot of his interviews about it. And he also runs the world's biggest hedge fund, if you didn't know that. Another very famous billionaire who has invested in China and is looking at emerging markets is Robert Kiyosaki. He wrote Rich Dad Poor Dad, which is the most famous finance book of all time. Robert is very bullish on gold, Bitcoin. He's looking at emerging markets. He still thinks that we're going to see an economic collapse in North America, which may or may not be true. I don't really think it's going to be to the extent of what Robert talks about. But either way, there's a lot of other billionaires that are looking at emerging markets as well. And actually, China has some really good companies that you can invest in right now. So let me go through the top ones in my opinion. So the first one I'm going to talk about is Alibaba. So Alibaba is actually the one that I put 5 grand into a couple days ago. And Alibaba is just an absolute giant. They have a market cap of 700 billion, so they're a massive company. And it's not a ridiculous PE. Their PE is about 26, and they're growing very rapidly for even how big they are. And the reason why I decided to jump in the stock is because they had a significant dip in their price last week. They went from about 317 a share down to 265. So I saw this as a huge buying opportunity. And I plan on holding Alibaba for a very long time. I see no reason to sell the stock. I think it's going to be an absolute powerhouse in the future. It already is a powerhouse, but I think that's just going to continue to be the case well into the future. And I don't really think Alibaba needs much of an introduction. I think most of you guys probably know what they're about. So the next company is Tencent. Now this is one of the largest tech companies in the world. They were founded in 1998 and they're involved in entertainment, artificial intelligence, video games, basically everything technology. I think they're getting into fintech now. So they're just another absolute powerhouse, and they are not a small company. I believe their market cap is around 600 billion right now. And yeah, if you're very bullish on the video game industry moving forward, then Tencent is definitely a company you want to look at. Of course, the only thing I don't like about Tencent right now, and the reason why I haven't bought any shares, is just because they've had a huge run up over this past year. And I mean, I would like to see a dip. I hate jumping into a stock when they've run as much as they have. So either way though, I think, even looking 5-10 years out, there's no way Tencent will be trading at this price in my opinion. But personally, I'm going to be waiting for that dip. Hopefully it comes. If it doesn't, well, that's okay as well. Next company is Etsy. Now, Etsy isn't really a Chinese company. Their headquarters is in the United States, and they were founded in the United States as well in 2005. Etsy is a really interesting, and I think it's a pretty unique company. I don't think many other companies actually offer what they do offer, so that is really good. If you don't know what Etsy is, correct me if I'm wrong, but I believe the way it works, if you're somebody who likes to make homemade stuff, you can list it on Etsy and sell it there. So they're all about selling really unique, homemade, different decor, and a list of different products you can see here that you can post on it. Like, it's literally everything: Christmas sales, mugs, ornaments, necklaces, face masks, hats. It's every kind of product. If somebody's making it homemade, you're probably gonna find it on Etsy. And I don't think they have really a lot of competition. I think if somebody's going to sell something homemade online, they're probably going to be posting on Etsy. So that makes them really compelling. And again, the only issue with Etsy is that they've had an absolute phenomenal run this past year. They went from around $50 a share to now $126 a share, and they haven't really seen a dip yet. So yeah, they're on an absolute rampage, and their revenues are reflecting this as well. So again, with this company, it'd be nice to see a pullback. I don't know if we will though. As long as they keep on performing well, we might not see that. But definitely a company you want to put on your radar at the very least. And then the last company I want to show you guys is JD.com. Now, this is basically a smaller version of Amazon, but in China. They have a market cap of about 127 billion, so they could definitely grow substantially more from where they are right now. So I don't actually see JD.com being a bad buy at this price, but just keep in mind they have gone from about $37 a share to now $87 a share in the last year, so they have had a huge run. Again, I would love to see a pullback on this stock, but I really wasn't interested in Chinese stocks before just a few months ago. So these were not on my radar. I didn't even think about investing in China. In fact, investing in China actually scared me for quite a while, just until recently I've started taking it a lot more serious and seeing just how China has been handling the health crisis. They've been doing really well, and their economy is seeing a really fast recovery right now. And also, they're probably going to be one of the most powerful countries in the world in the next 10 years, if not the most powerful country. So they're gonna have a lot of economic power. They have a huge population. So just a tremendous amount of growth to be had in China. It still does worry me that they are a communist country, so that could have a negative impact on their stocks. But I think that's just something to keep in mind, that they are communist, and it could have some kind of negative impact on these companies. But for the most part, I don't think it's actually a big deal. I think that the reward heavily outweighs the risk in investing in the top Chinese companies. So yeah, in my opinion, if you are going to invest in Chinese stocks, I would look at the ones that are big, well-established, and are clear market leaders. I wouldn't be going for any really small, unknown Chinese stocks personally. At least that's just not my risk tolerance. I'm personally looking at NEO and the stocks I'm listing here. So some of the more well-known and bigger companies is what I'm currently looking at. So yeah, guys, make sure to keep an eye on these Chinese stocks. I think that China is a very compelling emerging market and could be a good place to put your money in the future. I think it's pretty undeniable that China is gonna be an economic powerhouse moving forward, and the United States just isn't handling this virus very well. So that does concern me. So yeah, don't be afraid to look elsewhere to put your money. It never hurts to diversify a little bit out of your own country. I'm up here in Canada, and honestly, Canada really doesn't have a lot of opportunities to invest in right now. We have some good junior mining stocks, we have Shopify, but really not a lot of options. So I mostly put my money in the United States and then now looking at China. I have a little bit of money in Canadian stocks, but really not much. But yeah, as always, make sure to do your own research, and especially when you're investing into a country like China, make sure you do a ton of research in these companies and you know what you're getting yourself into. But yeah, I wanted to make this video to open up your guys' minds and let you know exactly what I'm doing with my money and my reasons for investing into China. Now, if you want to see a more in-depth video in any of these companies I mentioned, comment down below and let me know what ones you'd be interested in seeing. And don't forget to drop a thumbs up on the video if you learned anything or just found this video informative. And feel free to subscribe if you want to see more stock-related content. I do try to upload every day of the week, and I really do try to find the most valuable information for you guys. And pretty much like all day long, I just listen to billionaires, do research, I read through articles, and try to find interesting opportunities for you guys. So if that's something you're interested in, definitely feel free to subscribe. I do think you'll find some value out of these videos. Anyways, thanks for watching till then, guys. I really appreciate it, and I'll see you in the next video.